Hey everybody, it's Brian Shannon here from AlphaTrends.net. Today's Friday, the 1st of July, 2011. Let's take a look at this market. I don't know what happened with the Stock Twitch show earlier, but we've got this video, so let's go with that. Here we've got the S&P 500, and we were up another $1.95 today. For the week, the S&P 500 was up 5.6%. And I saw somewhere on Twitter, I think maybe it was Howard that had posted that this week was the biggest week we've seen percentage-wise on the upside since the 2009 low. So it's just really amazing to myself, and I think a lot of people, that this level of importance that we've seen earlier this year was tested at that 200-day moving average, and then we had such a sharp bounce. If you recall, we were looking at the on Wednesday that the market had gotten back above that 130 level, and I think what was really going on here was that we had observed the last week and a half or so that the Russell 2000 was starting to outperform to the upside after that market touched the 200-day moving average, and then created its own little pattern of higher highs and higher lows. And this breakout in the Russell occurred actually on Tuesday. For the week, the percentage gain in the Russell 2000 wasn't as large, but I think from the lows we've probably traveled further just based on the amount of time that we've had to travel here in this Russell. The Nasdaq also, it had a little bit more trouble with that 200-day moving average, of course, but once we broke that 55.5 level on Tuesday, so again, the Russell and the Nasdaq began their moves on Tuesday. For the S&P 500, it was on Wednesday that it broke that. It began its move, but it really got its upside momentum as it broke through that 130 level. It tested the 130 after that breaking, that breaking in here, 129.80 basically. It gapped up and pulled back on Wednesday, as we know, but just a real nice pattern of higher highs and higher lows. There was a lot of speculation as if was the 50-day moving average going to be resistance? Was it going to be this trend line? Was it maybe going to be a two-thirds retracement? And those are all good technical tools. And in technical analysis, we have to remember always is a tool. It's not a system. You don't want to get stuck, saying, hey, I'm going to short at the 50-day moving average. Had you done that? Today was obviously a very painful day. This was one of the rare times where we've seen such a large bounce. It'll be interesting to see this weekend some statistics about the magnitude of the bounce from that 200-day moving average. But next week what we want to be looking for, I think, is some sort of correction, either through time or price or a combination of the two. A pullback perhaps down towards that 132 level where we have the 50-day moving average and some consolidation, and then we've got to be looking at the next potential upside. It looks like 135 where we had two tests back in May. So, the market's clearly gotten a little bit ahead of itself, it would appear here, and we can say clearly, but that doesn't mean, it's time to sell short. When you have this type of uptrend, it doesn't make sense just to buy. It doesn't, just as much as it doesn't make sense to try to buy and expect that you're going to catch the turning point on the way down. Once in a while, somebody's going to catch it. They're going to catch it perfectly, or right in here. But it's only after a lot of other times and failures at trying to pick that bottom or top that you're going to be able to do it, and it's going to be painful along the way. So next week we want to see pullback / time consolidation and probably hold up above that 132 level for the Nasdaq. This market, obviously, again, that was at 55.5, and now that it had broken the resistance. Now we want to see. Let's go back here. I was pointing to this level as well. We've got 55.5 that's down a little bit further, but I think 56.5, 57, if we correct and pull back in towards this area, that should make sense. But again, trend line, 50-day moving average. I saw other people talking about how the top was going to be found at the 61.8% retracement, and none of those things worked. You can look at the volume and say, but it wasn't big volume. But someone said it right last week on Twitter. You can't take volume to the bank. The only thing you can take to the bank is price. Is cash. Only price pays. as I like to say. On Wednesday, we were talking about the semiconductors and how they had not participated yet. That again, we take a look at the gains in the semiconductors came on Thursday, whereas the Nasdaq began its break past resistance on Tuesday. The Russell 2000 began its move on Tuesday. The S&P 500 began its move past resistance, that is, on Wednesday. So we take a look at those semiconductors, and as I was saying in the video on Wednesday, that we didn't want to expect this market was going to catch up to the rest of the market, but above 33.5, we had to be aware that there was the possibility that we could start to see some outperformance here, and hopefully, hopefully you guys participated in that. We're above this rising 5-day moving average. I'm not suggesting I told you to, but I'm just saying, we're at the 50-day moving average here, and now a little pullback in the semiconductors down towards 34 would be an okay thing, and then build some more energy to get back up through that 50-day moving average. Either way, it was really kind of an incredible week, I think, for all of these markets. You look at the numbers here and where we've come from just this week. You look at these percentage moves, just really big, and the dollar was down 2%, but anyways, I don't want to go on and on here. I hope that everyone has enjoys a safe and happy 4th of July long weekend, and we'll talk to you next week. Thanks.